Most traders spend hours, even days, analyzing charts. And they still lose money. They get buried under a mountain of indicators, trend lines, and conflicting signals, only to end up more confused than when they started. It's a cycle of paralysis by analysis, but what if I told you there's a better way? Back in 2026, I completely changed my approach. I developed a system that allows me to analyze any market stocks, Forex, crypto, you name it, in under 5 minutes. No indicators, no confusion, and absolutely no overthinking. I call it the S.C.O.P.E method. And today, I'm not just going to tell you about it. I'm giving you the entire framework for free. This method isn't just about speed, it's about clarity. It's about filtering out the noise and focusing only on what truly matters on the chart. By the end of this video, you'll have a repeatable, reliable system that you can start using immediately to find high-probability setups without the headache. So grab a notepad, clear your charts, and let's dive in. The S.C.O.P.E method is a 5-step process designed to take you from a blank chart to a full trading plan in just 5 minutes. Each letter represents a crucial layer of analysis. Let's start with the first step, S, which stands for structure. Structure is the skeleton of the market. It's the foundational framework that tells you what the market is trying to do, long before any indicator gives you a signal. Forget everything else for a moment, look at a completely naked chart. All you need to do is ask one simple question. Is the market making higher highs and higher lows? That's an uptrend. Or is it making lower highs and lower lows? That's a downtrend. If you look at the chart and it's not immediately clear, don't panic. This is a common problem, especially on lower time frames where there's a lot of noise. The solution is simple: zoom out. Keep zooming out your chart until the overall direction becomes obvious. Are the major peaks and valleys rising or falling? This single action gives you the market's primary intention in less than 20 seconds. If the structure is bullish, you should be looking for buying opportunities. If it's bearish, you should be looking for selling opportunities. If it's sideways or choppy, perhaps the best trade is no trade at all. By defining the structure first, you align yourself with the dominant force in the market, instantly stacking the odds in your favor. Next up, we have C for cycles. Every market, without exception, breathes. It moves in a rhythm of expansion and correction. Think of it like waves in the ocean. There's a powerful push forward, followed by a smaller pullback before the next big push. In 2026, understanding these cycles is far more valuable than relying on lagging indicators. To read the market cycle, you just need to look for 3 distinct phases. First, the push. This is the strong, impulsive move in the direction of the main structure we just identified. Second, the pause. This is the correction or consolidation phase, where the market takes a breather. It might pull back, go sideways, or form a pattern. This is where momentum seems to die down. And third, the continuation. This is when the market breaks out of its pause and resumes its expansion in the original direction. Identifying which phase of the cycle you're in is critical. Are you in the middle of a strong push? It might be too late to enter. Are you in a pause? This is often the prime time to prepare for an entry. By recognizing this rhythm: push, pause, continuation, you'll know whether momentum is building or fading away. Your timing will become 10 times easier because you're no longer chasing price. You're anticipating its next move based on its natural flow. Now for step 3. O for origins. This is the one concept that once you see it, you can't unsee it. It's also where 90% of traders are completely blind. The origin of a move is the specific candle, or small zone of candles, that initiated a large, explosive price movement. Think about it. A huge impulse move doesn't just happen out of nowhere. It starts from a specific point where a massive imbalance between buyers and sellers occurred. This origin point becomes a memory point for the market. It's an area of extreme significance. Why? Because the big institutions and algorithms that created that move have their orders and interests clustered around that price level. So here's how you use it. When price returns to that origin zone, it will almost always react. It might bounce off it aggressively, providing a high probability entry point. Or, if it breaks cleanly through that origin zone, it's a powerful signal that the underlying trend is changing. Finding these origins is simple. Look for the start of the biggest candles on your chart. Where did that massive green or red candle begin? Mark that zone. These are the most powerful areas on your entire chart, far more reliable than a simple line drawn on a chart. This brings us perfectly to step 4, P for pressure zones. I see traders' charts that look like a spiderweb. They have 20 different support and resistance lines drawn, and they're completely lost. With the S.C.O.P.E method, you can get rid of all that clutter. You only need to identify two key pressure zones. The first is the sell pressure zone. This is typically the highest point the market reached before a significant drop. It's an area where sellers previously showed up in force and overwhelmed the buyers. The second is the buy pressure zone. This is the lowest point the market hit before a major rally. It's where buyers stepped in with conviction and took control. Instead of drawing thin lines, mark these areas as clean rectangles or zones. Why zones? Because pressure isn't a single price point, it's an area. Once you've marked these two primary zones, your job becomes incredibly simple. Price only has three things it can do when it approaches a pressure zone. It can bounce, rejecting the zone and moving away. It can break, slicing through the zone with momentum. Or it can fake out, briefly piercing the zone before reversing sharply. Your best, most predictable trades will almost always occur at these major buy and sell pressure zones. You're no longer guessing in the middle of nowhere. You're trading at the edges where the big decisions are made. Finally, we arrive at step 5, the most crucial part for turning your analysis into action. E for execution trigger. All the analysis in the world is useless if you don't know exactly when to pull the trigger. Many traders rely on lagging indicators like a moving average crossover or an RSI signal. But by the time those signals appear, the best part of the move is often already over. Your execution trigger needs to be based on pure price action, the most current information the market can give you. The key here is to pick one or two clean price action triggers and master them. Don't try to trade every pattern under the sun. Consistency is what leads to profitability. Here are 4 powerful, time-tested execution triggers. First, a break and retest. Price breaks through a key level, like an origin or pressure zone, comes back to retest it from the other side, and then continues. Second, a rejection wick. Price pushes into a key zone and is aggressively rejected, leaving a long wick on the candle. This shows a rapid shift in momentum. Third, a micro pullback continuation. During a strong trend, price makes a very small, brief pullback for 1 or 2 candles before the next explosive move. And fourth, a liquidity sweep. Price briefly stabs above a previous high or below a previous low, grabbing liquidity and then reverses with a strong engulfing candle in the opposite direction. Pick one of these. Let's say you choose the rejection wick. From now on, you only enter a trade when your analysis from the first 4 steps aligns and you see a clear rejection wick at your chosen zone. This is what transforms your S.C.O.P.E analysis into actual, profitable trades. So let's put it all together. Imagine you're looking at a new chart. In less than 5 minutes, you can now run through the entire S.C.O.P.E method. First, you check the structure. Is it making higher highs and higher lows? Okay, it's a bullish market. You're looking to buy. Second, you look at the cycles. You see a strong push up and now price is in a sideways pause. Perfect, you're in a pre-continuation phase. Third, you identify the origin. You mark the zone at the base of the last major impulse leg up. This is your key level of interest. Fourth, you define the pressure zones. You mark the recent high as the sell pressure zone and the area of the origin as the buy pressure zone. Now you know where the battlegrounds are. And finally, you wait for your execution trigger. As price pulls back into that origin zone you identified, you watch for your chosen trigger. Let's say it's a rejection wick. The moment you see a candle push into the zone and close with a long lower wick, you execute your buy order. That's it. In under 5 minutes, you have a complete, top-to-bottom trading plan. You know the market direction, the cycle phase, the most powerful zone on the chart, the key battlegrounds, and your precise entry trigger. This is the S.C.O.P.E method, a full trading system you can apply to any market, on any time frame, almost instantly. It's clean, it's logical, and it filters out all the noise. If you're tired of overthinking, of staring at charts for hours only to feel more confused, then I urge you to try the S.C.O.P.E method. It's designed to bring clarity and confidence back into your trading. This isn't a magic formula, but it is a robust framework that forces you to focus on what truly matters. It's fast, it's clean, and as you'll find, it works in every market in 2026 because it's based on the universal principles of price action, not on fallible indicators. Now I want to help you master this. If you want to see me break down the S.C.O.P.E method, Using live market examples or do a real-time chart analysis session applying these 5 steps? Let me know in the comments below. Your feedback guides the content on this channel. Tell me which market you want me to analyze next using this method. And if you got value from this breakdown, do me a huge favor and hit that subscribe button to join us here at TradeVerse. Thanks for watching, and trade with clarity.